We are back talking about fixed income trading strategies and also trying to place Kenya as an investment case, whether it's on equities, on fixed income, especially on the back of what has happened over the weekend. A 19% surge on oil prices. What does this mean for the Kenyan investment case? Churchill Ogutu is an economist at Genghis Capital, is here with us. Churchill, just before we took a break, we were discussing portfolios and crafting portfolios. You have a very interesting report and you have what you call the Genghis portfolio. That's chart 2 and our graphics team will put that up for us. What does this mean and how are you looking at asset allocation?
Well, we have three different categories of, in terms of the equities, we have three different portfolio classes. We have the one I'll speak about is the one which has been top performer, is the momentum portfolio. That one comprises of the liquid stocks, that's the Safaricom, Equity, KCB and EABL. So the most traded stocks.
Okay.
So that one has been performing quite solidly vis-a-vis the benchmark. So
what is the performance to date?
Should be 7%.
Wow, 7%.
Yeah, 7%.
Okay. Does this include the dividend yield or this is just the price return?
This does the price return,
wow.
yeah.
Okay.
So we are quite bullish on it, though it's come off because of the what's happening on the individual counters within the index, but by and large it's outperformed the benchmark that you are tracking it against.
Okay.
Yeah.
So do you create portfolios for your clients and do you use this as a basis for creating portfolios?
Ideally, we don't create for our clients, but what we have is just something that we normally have at the beginning of the year. We normally review our portfolios and then we come up with an outlook of the portfolio or the different portfolios, and then we just measure it against the benchmark. So something for... So
it's just something to actually put your money literally where your mouth is,
yes,
or at least your research where your mouth is.
Yes, or even for investors to pick whichever portfolio
they would want.
Okay,
exactly, I think that's exemplary. But now we're looking at 7%. And that's your best performing equity portfolio. How does that compare with fixed income assets?
Well, the fixed income portfolio is quite different because we have a different portfolio. We have a different benchmark. That's the FTSE NSE Kenya Government Bond Index. So that's the benchmark index. But it's slightly down, like 1% off the benchmark. We had a bit of some portfolio review in the middle of the year, pegged on one of the bonds had matured, so we had to come in and change the portfolio, but we are quite also just holding it till the end of the year.
Till the end of the year.
Look at how it will perform.
All right. Yeah. So when you're looking at fixed income assets, what are you advising your clients this week?
This week, of course, the big one is now the auction that is coming on Wednesday. So there's the 2-year, 15-year papers that has been this month's primary bond sale. One was issued last year and one was issued this year, so those are 15-year papers. But what we are looking at, by and large, we don't expect the 50 billion that is being sought to be received from the market.
Okay, what is your subscription expectation?
Around below 50%.
Wow, okay, yeah, that's a bit punitive, Churchill. Why?
So
you think they won't even get to 25 billion?
I doubt they'll reach 25 billion.
Why do you think so?
I'm looking at how the liquidity has been in the last 2 weeks. There's been a bit of some thin liquidity in the market. Also the aggressive mopping up activities by CBK, and looking at how even the uptake in T-bills in the last 3 weeks or so has not been quite positive. So I'm discounting a high appetite for the T-bills. Although there's a 2-year paper maturing next week, 31 billion in terms of its total amount outstanding. I doubt that those investors who are mostly banks, they are normally the ones who invest in the short end of the yield curve. They'll be comfortable to roll it over to a longer term paper. So I'm really quite skeptical of the...
What is your pricing expectation for both the second issue for 2018 and the first issue for 2019 reopen? I
expect some aggressive bidding, despite the fact I am seeing investors who really want to get in. They'll go really heavy in terms of their bidding. Right now, the 15-year in terms of the yield curve is sitting at between 12.3%, but I expect it to be a bit higher in terms of, in both papers, between 12.5% to to 12.6%.
12.6% for both papers. Very
both
aggressive.
Papers, yeah.
I mean, I'm always looking at the different investment portfolios and also the tenor. So on one end, your equity portfolio, which is for 1 year, rather about 9 months, is 7%. And then the other, on the opposite end, I can put my year, and I mean my money to a 15-year, which is a longer term paper, and keep getting 12.3%. I mean, is this reasonable? Should I expect to get the same? Do I actually expect to do higher next year or lower next year with regards to the yield curve?
It depends with what the interest rate environment will be, or depending on how there are so many dynamics towards what will dictate to the yields. Of course, what is the coupon is it's stamped, because these papers have already been they're already trading.
Yes.
They have their coupons which is above 12%.
So that is unknown. Okay.
That's known, yeah. But now in terms of the trading, now that's where the yield comes in. So at 12, what we are looking at it, people coming in aggressively, so they'll buy it a bit cheaper than where the market is in terms of the 15-year papers. And as time goes by, depending on how the yield environment is, it could either be, those papers could either be expensive, which means now the yields go down,
wow,
or they could be cheaper.
Or they could be cheaper. But
now
then again, as you said,
yeah.
all this is pegged on the finance bill.
Yeah, this is, at least for now, there's a bit of some uncertainty. And also, of course, depending on how the market dynamics works.
Okay.
Yeah.
My final question for you, Churchill. So let's assume that nothing happens with regards to the rate cap. What does that mean for overall economic outlook, and especially for fixed income assets vis-a-vis equity assets?
By and large, we see investors will be quite neutral on the fixed income assets. We've looked at how the yield curve has developed in the last 3 years, where the interest rate cap has been in effect, and we've seen there's been a gradual decline in the yield curve, mostly on the long end space. That's between 10 years to 24 years space.
Okay.
There's been a decline in that. So I'm still quite neutral on fixed income. Equities, of course, cherry picking on some of the tier 1 banks.
Okay, yeah. Fantastic. Is there anything else that you feel is pertinent to this conversation that we may have left out?
Just to summarize, the uncertainty is the known right now.
All right.
Uncertainty is what is now even driving even some investment ideas.
We need boldness and courage in times of uncertainty. We need to make a decision. But thank you very much, Churchill, for your time. So there you have it. In times of uncertainty, what will you do? I don't think we have the luxury of sitting on the sidelines and waiting to happen. If the uncertainty is not internal to us with regards to the Kenya economy, and this is what the legislative process portends with, as far as the finance bill is concerned, then it's further away from us with regards to the global markets. What this means for me as a person looking at the markets, it means that there are opportunities to cherry pick, whether it's fixed assets, whether it's fixed income assets, whether it's real estate assets, or whether it's equity assets. And the yield is very important. And I think gone are the days when we used to have double-digit continuous returns. I think anything between 7 to 12%, you're actually lucky, and it's better to be safer than sorry. Again, that was Churchill Ogutu sitting with us and giving us an economic outlook as well as a trading strategy with regards to fixed income papers this week. Thank you for joining us, and see you again tomorrow at 2:30. We're always streaming live for your benefit on the Metropole page, and that is on Facebook or YouTube. Good afternoon.